Man.
What's up, Nick? How you doing, man?
Pretty good, pretty good. Market to close today, like I was just saying, but
Yep.
still got some. We got some PCE numbers that came out this morning. We may get something interesting out of Jerome Powell this morning. I kind of figured that although the markets are going to be kind of quiet today and Monday, that you could still kind of do a little bit of a recap, like everything that's been going on. Where's your head at in terms of going forward, whether it be indices, gold, currencies, wherever you want to start? What are you thinking going forward into next week?
Yeah, so I would like to see some volatility. I showed this morning in my session. This is pretty crazy, man. If we go back to Wednesday, that was Wednesday's move. Thursday gap, nothing happened after the gap. Friday, nothing really happened. Gap lower on Monday, nothing really happened. Tuesday, nothing really happened. Wednesday, nothing really happened. Yesterday, nothing really happened. We've had in the last, this entire week of trading has essentially been less than the entire day of last Wednesday.
Yeah.
So did you notice like the S&P, like, oh, it carved out an all-time high again? I think there's 21 or 22 all-time highs in the S&P so far this year, which is a pretty good pace. But man, it just, I mean, you look at this is the Q. So let me go to the SPY. Look at the SPY yesterday. It's like sometimes when it's like everyone's like, oh, an all-time high. It's like that's not really an all-time. It's like, gosh, it's just
Right.
barely,
Right. Like
barely
barely
getting there.
touching it.
Yeah, it touches like all-time high. It's not that cool, man. So I'd like to see some more volatility coming into next week. I mean, okay, look, we're through Q1, right? Markets are closed. We have PCE coming in today during a holiday. The first thing I looked at this morning was the currency strength meter, and guess what? Garbage volatility.
Hmm.
I'm not sure if you've taken a look at this recently. On the Edge Finder, do you guys have the daily trading ranges by
We don't,
chance?
we don't have the daily
Okay.
trading ranges. We do have a simple heat map, but
Yeah.
pretty much what you got. Yeah.
Okay. So if I want to show trading ranges, and again, I'm going for the last 2 weeks of average volatility.
Hmm.
This shows that. Take a wild guess here, Nick. What do you think is the biggest moving currency pair right now in the forex market
Um.
of majors? Like no exotics, just majors and minors.
Yep. I'm gonna of the actual majors. I would say dollar yen of the kind of majors plus the major crosses, I guess. Pound yen.
Pound yen and Swiss yen,
Swiss
122
yen.
and 121.
Swiss yen. Interesting.
Yeah. Well, the Swiss yen. So we actually had the Swiss with the cut last week on Thursday. The Swiss had a nice little poke of like a lot of weakness across the board. I mean, I've been long against the Swiss for over a year, and it's finally starting to pay out. I mean, I'm sitting on this week in one of my accounts. I'm sitting on like 6,100 pips of profit that I'm still letting it run. I'm not joking, dude. Like I'm investing in the Swiss franc basket, going against it obviously to get some positive swap and financing. But these big positions I've been building, and they're finally starting to pay out. And there's a lot more to run. I'm still looking at maybe the actual movement is still anywhere from 200 pips in a currency pair to 500 to 1,000 pips in a currency pair. And all I'm really looking at for a Swiss pair would be like a 3-wave move or a 5-wave move. I mean, if that's all I did was waited for a 3-wave to complete, there's a ton of profit still to be made. So anyway, the reason I bring this up is I mean, if traders, I had a trade this morning that just said, hey, Chris, I adjusted my strategies. I'm only looking at like 20 pip scalps or 25 pip scalps, which is awesome. I mean, right now, if you're looking for income in the Forex market, I do think you have to change your expectations where you're not going to see a 100 pip day. You're not going to see a 150 pip day because they're clearly not happening. So, I mean, here's a good barometer. When I first started trading Forex back in like '07, '08, the euro dollar was moving like 125 to 150 pips a day.
Hmm.
So I mean, I've been in environments where I've seen, the euro Aussie, pound Aussie, euro New Zealand, pound New Zealand moving 3, 4, 500 pips a day. That was during 2020. I mean, you saw that. You saw that
Yep.
not
Yep.
that long ago. Yen pairs in 2012 and 13, we had, yen pairs were moving 600 or 700 pips a day in 2008. You had, but again, I go back to what's the most liquid currency pair? It's probably the euro dollar, maybe the dollar yen. But if the euro dollar is moving, 100 plus pips a day, that's a pretty good volatile environment. You'll have other currency pairs on the peripherals that'll move 200 pips a day. But if the euro dollar is at 50, 60 pips, the expectation is you're in a low volatility environment. And right now, this is why we keep talking about this, Nick. The carry trade is so important. If we have low volatility in Forex and we have this drifting melt up in the stock market, it's low volatility, it's carry, the market's just still digesting all this liquidity, and it's just not derailing. And now that we've slowed down so much after FOMC, the Fed didn't talk down the market. I could see us going way more sideways than having more of the same. I mean, the S&P out of the gates is probably up. Is it up 10% officially if we poke that high year to date? It's got to be close.
Oh, got to be close. It's got to be really close.
Let me check. So year to date is 10.16 on the S&P. So
Wow.
it's at 10%, and the average move. So number one, 8% annualized is the S&P return historically. During election years, it's anywhere between 11.85 and like 12, 12.5, 13%. So let's just say 12 to 13% during an election year. Doesn't matter if it's Democrats or Republicans, about 13%.
Yep.
Market likes gridlock, right? Market doesn't like, all one-sided. So House and Senate divided, good for the markets. They tend to outperform if we have a divided House and a Senate. So anyway, to wrap this up, what do you think about this? We did mention this not too long ago, but the thoughts on the dollar index still being, I keep hearing the saying around there, all the podcasts I'm listening to, they're like, it's the cleanest dirty shirt in the laundry.
Yeah, I think that's kind of the case right now. A lot of, you're looking at, I even kind of saw that we can use a little bit of edge finder logic here really quick. I'll show you this. So if I just look at some, I was looking at yen crosses earlier in the stream here. So let me just get back to this. I was just looking at yen crosses, and I thought this was kind of interesting. If you add everything in here, yen, we don't have a Swiss franc, but we can, let me find it. Where is it? Swiss yen. Okay. So I was looking at this, Chris, and to answer your question, kind of the same synopsis, because what we can see here is that the yen is actually right now, at least in terms of economic growth, it's showing some strength compared to a lot of other places like the UK, the Kiwi, right? The Australian dollar. When we're looking at, GDP comparisons, PMI numbers, retail sales, inflation, like most of our readings here are leaning towards, yen strength. But then when you look at the dollar yen, it's like kind of reaffirming what you're talking about. The U.S. economic data, there's not a huge preference towards Japan, whereas Japan is preferred against several of the other currencies. Japan is not preferred over the dollar. So I kind of can see that too. We could do that same study here just across the US dollar stuff. So let's just do this. We'll just reset and we'll just go major currency pairs. And you can see the dollar here is pretty favored, right? So if you see pound USD short, Aussie dollar short, Kiwi dollar short, neutral, 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 neutral. So of any of the readings, the dollar's getting favoritism. So kind of interesting. It might just be the case that although the dollar, yes, we're still going to see rate cuts, the story is still other places are going to cut sooner because their economies are hurting more. So I don't know, kind of interesting.
Yeah, and I think if the Eurozone wants to see the DAX continue to go higher, it probably happens on the back of a weaker euro. The Japanese yen has been weak and the Nikkei has been cranking to all-time highs, and it's actually outperforming year to date. The Nikkei, I think, is up. I don't know what it is year to date, but I know that the rally from last October's bottom to November, December, like it's up 34, 35%. So Nikkei 225. Right out of the gates, let me see when the year started. So this is the daily time frame.
I just did it. It's 21%.
Wow. So it's double the S&P for the year to date. It's crazy. It's crazy. So again, weaker yen, stronger market, weaker euro, possibly stronger DAX. And so I said this morning. I could see the dollar index being a very challenging basket to trade, and I could see the dollar in general in Forex as a tricky trade this year because it's low volatility. It might favor a slight carry trade, maybe, right? And especially over the next 2 months, because now with the Fed being silent until May 1st is the next rate decision, but it's going to be a pause most likely. The market's anticipating a June cut. But we still have, so we had PCE come out today. April, I think the second week of April, we're going to have another round of CPI and PPI data. and the Fed doesn't have to say anything until May 1st. So
Yeah.
we have all of April to see, like, how sticky is this inflation getting? Is the Fed going to start doing something to act on it, or are they going to continue to ignore it right now? Maybe they do. So I could see the dollar as a currency performing better against the euro, better against the CAD, possibly the pound and other currencies if these central banks cut over the next couple months. But if the Fed pause carries until June and we have other central banks cutting within that window, that's why I say the dollar index could continue to rally a little bit. And that's where, let me get to my charts here. I'm just talking with my hands. So dollar index, I could see this being a little bit of a rally. You know, this past support, this level here, broadening pattern is all the way up towards 108. It might not, I don't know, man. It might not feel like it's a strong, aggressive rally, but I could see that we don't really break back below 103. Maybe it's a slow grind to break these highs at 105. But if we can get above 105 on the dollar index, I feel like the dollar index is capable of getting up towards 107. And again, though, the weird part would be if the dollar index rallies here and the stock market goes higher, that is not a typical correlation. So it's like it would be an
Right.
odd environment of this melt up where assets still go up, but the dollar could underperform against equities, underperform against gold, underperform against Bitcoin. And that's another thing this week. I know it's on your radar. Please tell me you're still long gold and you're just
I
crushing it right now,
am.
because
I
it's
am.
been a great trade, man. It's been such a good trade.
I know. And Chris, I'll show you. I'll just brag for a second on my gold trade. So I've entered twice. I've
Okay.
told you a couple times. Went long, literally like before the run up, which was great.
Yeah.
If only all my trades looked like this, Chris, it would just be easy. And you and I, we could go down to Mexico and just sit on the beach and just hit trades like this every day. Wouldn't trading just be so easy? But no, I'm kidding, of course. But yeah, so I am still long gold. But to your point, Chris, what I love about the story for gold right now is we're here slicing up like, well, why is the dollar up? Oh, it's because the other ones look weaker. But what I love about the whole thing, it's all of them competing to not cut rates. And but the point is, all of them are having to cut rates. That whole story contributes to gold going up.
For sure.
And so I'm not by any means like a gold bug or a perma bull on gold. I've shorted gold, many times. And so I'm not purple, but the scenario here just looks really strong for gold continuing to do well. I sold puts on the miners, GDX. I did okay on that. I went long gold, and now you saw I also sold puts on TLT. So I'm very exposed to the rate cut story,
Yep.
but it's been on my side. The wind's in my sail right now. And when it shifts, I'll have to cover for profits or just kind of adjust. But for now, things are going well on that front.
Perfect. Yeah, I'm the same way. I have positions on GLD and GC for gold futures, and I also did a GDX trade, a couple of credit spreads. I was going to do a long call and do like a longer term diagonal spread. But my GLD position right now, I just did it this morning. I paid about $7 for my debit. I'm up about $7.50 already, so I'm up over 100% in my position. And I'm looking to hold on to this a little bit longer. So my measured move conservatively is 2271. That's right there in the radar. Like, we could possibly hit that next week. So
Crazy. Chris, my measured move, so right at the beginning of the year, my
yeah.
target for 2023 was
Mhm.
2280. So $9 off from your target there, which is
Okay.
kind of what I'm not looking to take profits if it hits that level personally. I like to trail stops, but
Okay.
that's the point where I really start to ratchet in my stop loss again. But it was just kind of crazy. I was thinking about that. I almost have to be like JP Morgan or Goldman Sachs and adjust my yearly target here now that the market's running.
Yeah. Can I ask you, how did you find your target? How'd you get 2280?
Yeah, I had fun with it. So what I did was basically I looked at, remember for a long time we talked about the breaking of all-time highs and how
Mhm.
a period of like a correction period where you actually see a break was usually followed by when an all-time high hits, it's usually a really bullish signal. Well, I tested it. I went back and my measured move idea was based on what happened in 2020. We had a very long duration from
Mhm.
2011 until even retesting all-time highs. And I just tested and I said, well, how much, when we did get above that, how much further did we go? We went
Mm.
about 10.5%.
Okay.
And then I said, well, we've seen something similar here forming. where we've been kind of your cup and handle, kind of your just long period of consolidation since that 2020. Well, we got the breakout, and my thought process was there is a 10% move to repeat that long pause, all of a sudden, all new all-time high breakout. I think 10% is a conservative breakout. To be honest,
Yeah.
this was a wonky move just because of COVID was such it broke everybody's data and everybody's, systems. It was so weird. But I think that a 10% move here is perhaps, at least if it were to repeat this leg, is how I calculated that. Nothing magical, just a all-time high breakout. How far does it follow through? Seems to be about a 10% move is a healthy just breakout. But it doesn't mean it couldn't just 10% pull back, another 10% pull back, another 10%. So we'll see.
Yeah. It's interesting because we got there very different ways, but yet we're still right in the same wheelhouse as far as our profit
Did you use bid extensions?
Well, so I did a couple of things. So what I did first was I just saw this range and I just measured the 50% move of that range, and that's my halfway target. And then I measured the full range, and that's my full one, like that's my 100% move. So and this is just straight up from Forex trading, news candles, breakouts. It's kind of like you've got your range, you get your breakout measurement. Now, when you just said this big rounding pattern, I'm like, you know what? I do see a head and shoulders in silver. Oh my gosh, I see like this is kind of a head and shoulders in gold. And granted, like it's in the context of a larger range, but if this is a head and shoulders as well, one thing I can measure is this yellow box is my symmetry. So I took the measurement here from this low to high, and I projected symmetry right there, which is again kind of right in that same window of about 2270. But here's the nice thing too. If we see this high retested, and this is wave one, this is a pullback for wave two, this is a push for wave three. If we have a pause for wave four, Nick, wave five gets us up here towards 2470. So like you said, we could have, a pullback another 10%. We could be kind of approaching our projections the same way. I don't know. I mean, for me, because I'm trading mostly options with my gold positions outside of, gold futures, I'm not long the futures contract. I'm just trading options, but I'm long the GLD contracts. And I do think that, right now my GLD, if it gets up to 210, I'm maxed out for my profit. I've got a $20 cap on my position. 210.
You said it and then you spoke it into your typing.
210. My fingers are taking over. So GLD, I've got a covered call, or not a covered call, but a sell call against my diagonal at 210. And right now that first measured move is around 213. So I am debating. If I could look at it now, it doesn't really matter because the markets are closed. But if I go into Monday and I'm doing a portfolio spot check, I might look at rolling, as long as I can get a credit for it. I might roll it out another week or two and see if I could get maybe another credit and roll my strike price up a little bit, so I can take the 210 and roll it up to 211, 212, possibly for a credit. So I'd have to give myself time, which right now I think I'm going out to like April 19th for the 210, which isn't that far away. But if I went to the May expiration and I get myself the extra time on that sell call, what I might be able to do is roll that out and up for a credit. So I could roll it up and strike from 210 to 211 or 212, and then maybe still get like a 30, 40, 50 cent credit for it, where I can get more credit on the net position, which lowers my cost basis, and then also increase my overall profit target by a couple of bucks to give me a bigger gain. So I'm, like I said, already up 100%, no complaints on that. If we get up to 210, that would give me almost a 200% upside. So I paid about $7. If I get another credit for it, that'll bring me down to like below $7. And my max profit would be, let's say I can roll it up to 213. So it'd be a 190 minus 213. And I pay, $7. I pay $7. That'd be a $16 gain on a $7 debit. I make 228% of my gold position.
It's not bad.
I'll take it. Yeah.
Yeah.
So we'll see what it does. But
Yeah,
that's what I'm looking at to do next week.
Yeah, exactly. You also mentioned silver too. I think that, if you're going to see a bigger secular move into the metals world,
Yes.
and this is the thing, you look at gold when it really runs. I've made this point many times, but I know somebody in the audience who's new to trading needs to hear this. Many people, they get used to trading the environment that they're trading. Like they think this is how gold moves. Oh, it chops around when it goes too far. Oh, it always snaps back. when gold really moves, you need to be so careful if that's your way of thinking, because
For sure.
gold makes its moves. Historically, the way it moves is it moves boring and nowhere, and then all of a sudden just makes massive gains in a single year.
Yep.
So silver is like that, even on steroids. Like here is
That's COVID. Yeah.
2020 up 144% on just a shiny rock in the earth. Like it's a crazy thing. So
Mhm.
the point I bring up with silver, though, is that in most of the major bull cycles for precious metals, usually gold starts, but silver starts to outperform. So, really big signal to metal market bulls right now, I would say, would be: are we actually going to get enough strength here to break through this long term? As you just pointed out, like we've been in this choppy consolidation for silver. Like, can we get that breakout? If that breaks out, again, silver might actually be the more, the outperformer if you really think metal markets are going to run.
I do think that because well, here's one way I'd look at it too. If we just look at XAU versus XAG and compare gold to silver chart,
Mhm.
what I do have on this chart is it does cooperate pretty well when we get overbought conditions or oversold conditions. So this is oversold, this is overbought, this is overbought. If I start to print the same thing, where right now gold is up versus silver, so gold is outperforming. If we start to see, gold's obviously up to all-time highs and looking great as far as our trades go. If gold, silver on this chart starts to show an overbought condition, that's when I'm going to start looking to get a little bit heavier, probably a little bit more bullish on my silver position. And all I really need to see on the silver chart and where would I want to get long is I'm long already because I'm essentially doing this in my silver contracts for the futures market. I'm selling puts and doing credit spreads down here. On SLV, I'm selling puts and I'm doing credit spreads down here. I'm also
Mhm.
long with a diagonal spread out to January and March of next year. If we break above 26 on silver, that to me is the green light. And it's so close. But that confirmation right there gives me we had the swing you just mentioned for that huge 140% move, and then it's been all corrective. But this to me is my bullish pattern that once it breaks, measure that move to symmetry, measure that move to symmetry. I've got two levels out here that I'm really interested in. Again, just using the swing. If you measure this low from 2020 to high, take that move right there, okay, and make that like spot on symmetry. And if we have a push to match that, that's where I got that first black line at the top. So right
Yep.
there's my first measure move. Now, if that's a wave three, then we look at a pullback that would start roughly around this past resistance. There's my wave five. So wave three, that's my projected move. That's my wave five. And so to me, if we break above 26 on silver with some good looking bullish direction, target one for me is going to be 35 and change, and target two is going to be 47, 48 and change. That
Yep.
upside wise is way better than silver or way better than gold. I mean, right now we're talking if we hit that move, that's an 80% gain in silver. I
Hmm.
don't care what gold does, but it's not going 80%.
Right, right,
Yeah.
exactly. Yeah, no, I think you're onto something there. I think if you're really interested in the precious metals, everybody talks about gold, but well, it's because a lot of times when people trade it, they trade it, super high leverage, so it doesn't really matter if it's gold or silver. But if you're talking about the actual commodities performance, silver typically is like the leverage version by default of gold. It moves a lot more. Now that being said, silver, with warning, has been a terrible performer over the longer term.
Mhm.
It hasn't moved anywhere since the 2000s, whatever 2000. I mean, long term, there was like a lot of the silver crazy people love to, and I'm one of them, like to point out that the Hunt brothers back in the day cornered the silver market and they drove up the prices, and that's a crazy story. I think everybody should check out this weekend if you haven't already. Kind of an interesting market history, but yeah, silver I think is long overdue for a bigger push up. It's they don't make any more of it. Same with gold. Um, you know, a lot of times people will think, oh, that's too high, but that is like usually a green light for me. When I see a bunch of people commenting on my stuff, Chris, like, oh, gold is too high, like this has to, like this is overdone. I'm like,
Yeah.
gold
Means
101
more to
is
go.
it can way go further than you think it can, because it's
Yep.
yeah, it's crazy.
That's a Soros thing. He's like, every time I see a bubble, I buy it.
Yeah, right.
Right? So I mean,
Yeah.
if you think it can't go higher, just wait. Um, and right now too, I mean, this is one thing that's been a little bit eerie about the last few days of trading being so quiet. is, we're in an environment where April, May is typically, show me on the Edge Finder where we have like the monthly seasonality, because I know that July is a pretty bullish month. Where do I have to go on the Edge Finder here, Nick? If I want to
So
see like what's the history on S&P? You can grab it.
seasonality,
Seasonality. Okay.
just hit monthly, and there it is, S&P. So it is kind of quiet in April. In the last 10 and 5 years, there's a slight expected upside, but
Yeah.
not as much as February, March, and then also the only time the expectations in the last 10 years have been negative, which is actually really impressive to me that we actually even get. This has been a super solid 10-year period for the
Yeah.
S&P 500. So it's surprising that there even is this, but September's kind of an underperformer. But it swings back in July. There's really solid expectations. August, and that's also, Chris, kind of backing into election season heavily. So I
Right.
wouldn't be surprised if that election seasonality comes into play and we see second half of this year a bit of a stronger push. I really thought that we would get some sort of a pullback. In the last few years, we've seen more correction in the month
Sure.
of March, things like that. But again, market doesn't care what I think. It does
It
what it
makes too much
wants.
sense. Makes too much sense to get a
Yeah, right.
correction.
Exactly.
Everyone's like, "Oh, the Fed's going to talk it down." Well, they didn't.
Right. They did
I
not.
was surprised that Powell was as dovish as he was, and I was surprised the market moved the way that it did. When we did our session in the trading battle that day, it's like that's one of the rare occasions that you get the news and the press conference pushing the market in the exact
Yeah.
same direction. That's
Yeah.
so rare in an FOMC announcement. But it is what it is. We push all-time highs. The next day we hit Q all-time highs, or the NASDAQ all-time highs. And then we just eked out another high yesterday. And again, next week, new quarter, new month, another week to kind of settle back in. I did do some interesting nerding out on some probabilities. I've got a couple things that I think on, I've got like every 1 to 2 weeks, I do a volatility play on the SPY, the DIA. I am actually not a huge fan, and it's not that I don't want to trade it, but I don't love trading the QQQ. I mean, it's obviously a great index. It's been one of the best performing indexes for the last 30 years. The issue that I have with it is, man, do you have to pay for that implied volatility?
Mm,
And it just, when you need the cues to move, $12 or $13 in a given week to make money, I'd rather trade the DIA, which moves about $7 and you only have to pay $4. So it's like
sure.
the way it's priced is just more fair, to me at least. And then the SPY averages about $10 to $11 a week, and I pay about $5 or $6 a week. So probabilities on those alone, I just think are better. If I'm paying, $8 or $9 for an expected $12 or $13 move, yeah, I can get it, but I'd rather pay less on the debit if I'm doing a volatility play. But what I dove into is, the SPY. I looked at a couple of things. I looked at the probability of staying within the daily ATR. And what I discovered was on Mondays, over the last 5 years, the volatility is respected within the range of about $4. We're at an ATR right now daily around $4.08. Mondays are very quiet in the SPY. We typically have maybe a slight gap opener or opener high or lower, but either a quick gap fill, and just a very quiet market on Mondays as the market just kind of wakes up, starts a new week, and then we start to get some traction during Tuesday, Wednesday, Thursday. But
Mm,
if I wanted to be an option seller, Mondays by probability alone is a great way to do it. So I was
interesting.
just looking at different strategies of what could I do to sell some options on Mondays, and pretty simple stuff. If I do the SPX, because it's an expensive index, I can't do strangles on it. That costs $500,000 for a position, which I'm not going to do. But the SPX Iron Condor is a possible way to do that, or just a single direction credit spread. If you see prices where it is, you can do a bear call spread if you're a little bit more favoring the downside, or obviously bull put spreads if you want to go with the inherent bullish bias of the markets. And then in SPY, you can get a little bit more creative. You can do a strangle on the SPY. I'm going to explore this trade for the next 30 days on my own, but I'm calling it a swap. It's going to be a SPY trade.
Mm,
It's going to be a straddle swap, and all that means is I sell an at the money straddle. So if the SPY opens up at 520, I sell a 520 call, I sell a 520 put, and I do that for a single day. I don't collect a lot of premium. I get like anywhere between like $1.50 to $1.80. Right
mm,
now, volatility is low enough where I'm not getting a ton of premium, unfortunately.
right.
But to that, to make it a defined risk trade, if I sell that straddle and the market stays within about that $1.50 to $2 range, it's pretty easy to hit like a 25% take profit. As the day goes on and you get all the time decay that works in your favor, you get an opportunity to see, if I paid $2 for that debit, I can make $50 a day on that trade. So I want to monitor it first. I want to make sure it's something that's sustainable. But what's nice about it is, even on the worst case scenario, if the market moves, $5 against my position, I'll be down maybe $50, $60. So my risk is contained where it doesn't get bad, because I reset the trade every day. And then consistently, with the markets having, 65, 66% of the time going within the daily trading range, if we're selling premium or we're selling options, we can make money. So I'm debating on like 25% profits or 10%, but still, I need to have some strategies where, okay, here's a Monday strategy for me. Here's a weekly Friday strategy. Here's the quad trade I was doing, which is like Fridays and Mondays. I want to try to make a good solid 10% for my portfolio, 15% for my portfolio, just on the indexes alone. And from there, it's like I can be no direction, right? Like very little direction, just collecting income and taking, 0.5% risk, 1% risk, do it routinely, and generate, maybe 10 to 15% for my entire portfolio. If I did that for a nice little safety net, and then we have a trade on gold, and then we have a trade on Bitcoin, and then we have some stocks that do pretty well. I mean, it's not that hard for me to have my portfolio do, 25, 30% a year. It's really not. So
question for you, Chris, on the options side, do you find yourself, because you use a good diverse set of different approaches and styles with your stuff, do you find yourself usually more on the selling volatility side, or are you more on the directional bias buying options side? Which side do you generally find yourself on more?
I'm definitely on the selling option side, but if I'm going to buy options, I typically buy them with the ability to lower the cost basis routinely. If I'm going to be long an option and I've got to pay for that premium, I want to lower the cost basis. So when I do I built this out this morning. I was just talking about this in my first session. If I just did this trade right here, if I just buy an at the money straddle, you're going to see that this area is a lot bigger, because I'd have to pay way more for it. But if I add in, and this is, the strategy here is reverse iron condor, because I want to see a breakout trade. Well, if I buy a call and then I sell a call against it, and then I buy a put and I sell a put against it, it makes my debit way cheaper. So all I need for the S&P that averages about a $10 move per week, I need this index to move about $5.70. I believe that the market can do that, right? I believe week to week that the S&P can find a way from this position right here to move, $6 one way or the other. If it does that, I can make money. I don't need it to go max me out at $10 here, max me out at, $10 here. If it goes $6 or $7 and I can grab $1 profit, I just look at, can I hit a 15% take profit, or can I hit a 25% take profit? If I do, great. On those crazy weeks like FOMC, we get big fat movements where I can get 100% profit on those positions. But I'm not I managed a lot of my trades early during our trading battle because of everything that was going on that day. But the next day, all of my positions were up like another $1 or $2, and it would have been great to be like, oh, I should have just kept them open. But nobody knows what's going to happen during FOMC. And certainly I was way more expecting Powell to be firm and a little bit more hawkish and have the markets dip a little bit. They did not. So I just closed down, took the profit, and it is what it is. I mean, yesterday I'm sitting up another, another 1.5%, 2% for my portfolio. It's just been super quiet, super calm, but yet my portfolio is just green on the day and it's still rallying, so that's good. No complaints. Yeah.
Yep. I don't blame you at all, Chris. I'm kind of feeling okay with my recent, being long commodities while the market's doing nothing. Felt really good the last few days.
Yeah.
We'll see if that continues to be the story, but I also would not mind at all if the VIX spikes here for me at some point, so I can get into some wheel strategy stuff. At some point, Chris, I might widen my horizons a little bit with options, in the sense of if I'm just stuck in this low volatility setting for a long time, is my option strategy going to get flipped off permanently until it comes back? Maybe there's something else I can do, and I might work towards experimenting towards that. But for now, what's nice is that the low volatility environments have equated also to nice momentum moves in a lot of risk assets as well as commodities. So I'm not hating it all. I've got one strategy working well, the other. And for me, I have two strategies, and it's like a light switch. Usually one is really performing well and pretty active, and then the other one is like kind of dormant, and then they just flip back and forth. And for me, that's all I need. So keeping it simple.
Yeah, I mean the wheel strategy is great too, and right now, I mean, in a low volatility environment, you're not collecting as much premium, but
Yeah.
in fact, I just saw this video yesterday with Tasty Live, or it was a Tasty Live segment.
Yep.
They looked at a study that compared, in a low volatility environment when the VIX is under 15. So if I go to the VIX here, and we're
Hmm.
trading in that 10 to 15 window right now, right? The VIX is at 13. In a 10 to 15 VIX, that's considered low volatility. Your basis points earning on selling premium, doing a strangle, you're collecting way less than average if we're at like 15 to 18 or 15 to 20.
Yep.
I think the average VIX for like a 10-year history is like 18. I think that's about the average.
Yeah. I think
But
if you go
we're
longer too, it's been like 22 or
yeah, yeah,
something.
yeah.
Like,
And we'll get us. I mean, we'll get a spike. We know that we're going to get a spike, but a spike is what we typically see is it spikes and it fades immediately. So my point is, if all you did was sell premium, you might collect less for it, but it also plays into the efficiency of the market. You're
mm,
never having a losing trade necessarily with just selling premium. Like there's always ways to adjust. You're never on the hook for like an unbelievable loss. I mean, you can always make adjustments in your option trades. But if
yep.
you are long the SPY, I mean, think about this. I mean, and I don't think traders understand this. I just mentioned this yesterday in a class. The average return annualized on the SPY is about 8%. So, what is the risk adjusted return? If you want 8% a year and you think about the last 5 years of trading, you went through a 30% pullback in COVID. You went
Mhm.
through a 28% pullback during 2022. You went through a 56% pullback in 2008. So you're talking about risk adjusted returns where you have to take 2, 3, 4, 5 times more risk in order just to make your annualized 8%.
Yep.
So I think traders understand that, oh, I just want a strategy that, I can make, 100 pips a day. Give me that strategy, Nick. I want to make
Right.
something. I just want to
Right.
make 50% a year with like 10% drawdown. It's like you don't understand that's impossible. Like that's
No, no,
not what
you're
the
so
markets
right.
do, right?
Oh, that's the people. People be like, why, why make 8%? I could just leverage it up and make 18%. I'm
Right.
just buying this, and it's always like you said, market is pretty efficient. It's pretty smart. So it's kind of hard to just beat it with a simple trick. So there's no shortcut for putting in work and trading the environment you're in. I think that there's a reason why we're so active in the meantime. Like you
Yeah,
can find ways to trade environments more precisely, but at the end of the day, it's hard to beat that. And most traders are sold the idea that they can get massive returns on no drawdown, and it's such a pipe dream. Here we are. You've been doing this longer than I have. I've been doing this for years. Like it's very, very difficult to get even the S&P's returns with better risk adjust. That's even hard to do that. So
sure.
um,
Well,
so
the way to beat it is you got to have the courage to buy when things are really ugly, right?
yeah,
I mean, if you, I mean, I don't know how well you did in 2020, 2021, but I'm hoping you did really well
I did.
because it was a really easy environment
Mhm.
to understand that most people were panicking. It felt like the whole world was going to end. But the first thing I saw happening over that month of February and March was we are getting discounts on stock prices that we haven't had for over a decade. I'm going to get in.
Yep.
And that's all I thought about was just and it was literally like I'm going to test the waters on a bunch of different trades, and they
Hmm.
all turned out to be like 100+% winners, if
Yep.
not more. It's like, and if I was still holding them, that'd be even more ridiculous. But the point is, it's crazy the psychology and the sentiment of investing because man, when things, it's like right now, it's like what I would kill to have a freaking pullback so I could buy a dip.
Right.
It's like, okay, I guess we're just going to keep going higher or melting up higher, and it gets more and more overbought. But I mean, in a way, we also could be suppressing this entire inflation environment where the Fed seems to be keeping it under wraps right now. But man, I just think like bubbling under the surface, we could have an inflation environment that if it breaks and goes higher, somehow it creates like the vicious cycle of like we put in another Fed backstop, markets go crazy, prices are ridiculous all over again.
Yep.
And ultimately, it's like, what's going to go higher? Equities, option, like there are assets. I mean, like asset prices go higher. Right now, it's like the best place to be would be in freaking property. If you own land, if you
Right.
own property, that's probably the best place to be for the next 10 years without even a care in the world. Is just
Yeah.
buy as much as you can and leverage yourself out like crazy. Buy property, give it 5 to 10 years, it'll double and triple in value. And that's the one thing, it's like you can't make more of it, right? Like as we know, we can't make more of it. We can build vertically, but if you own that land,
Right.
I mean, it's just going to keep going up. And I think that's the crazy thing over the next 5 or 10 years is that's and when you see like BlackRock buying multifamily homes and
Hmm.
Goldman Sachs buying like basically subdivisions, it
Yeah.
just it that's like where do you think they want their money to be? And,
Yep.
and
It's
it's
true.
going to be something that appreciates and it's going to be a hard tangible asset.
It's true. It's true, Chris. I'm gonna back out, let you take this show for a little bit. I wanted to mention to everybody who's watching with us. Let me get my quick plug in for Chris here. If you guys enjoyed listening with Chris, he's going to continue to take over the show for a bit. But before I step out, I just want to let everybody who's listening know Chris has his own YouTube channel. He's got his own Discord community, a bunch of great free value that you can take advantage of. We're going to drop a link here as I'm speaking. There it is in the chat. You can find Chris Pulver's YouTube channel. It's just Chris Pulver Trading on YouTube, and you can check out some of his content. Find his Discord there. All sorts of good stuff. And Chris, thanks for taking over the show. I appreciate the conversation. It was awesome.
Thanks, Nick. Have a great weekend, man. I'll see
Thanks,
you
man. You
guys.
too.
I'll see you next week.
Yeah.
All right. Thanks. All right, everybody. I'm just going to get a Discord link going. Let me edit this so it doesn't expire. If you want to join into the group, I'll post this link right now. So here is Chris Pulver Trading Discord channel, and that should be posted there. I also want to make the quick disclaimer. You all should know this. If you're joining my Discord group, that is the best place to find me and the true me. I literally posted it this last week, and I said, look, if anybody is getting, getting messages, solicitations from an imposter, from a scammer, it's fake. They spell the name wrong. They directly message you and they solicit. I don't do that, right? I've got this one-to-many group chat in the community. I will post general stuff. I've got a blog. I've got all my analysis, my education, my links. All that stuff is in one place. All my content's in one place. But my point is, this is where you can find me. So if you want to find me and you message me, the real me will reply. But you message me first and you initiate that conversation. I will never direct message you. I will never initiate or solicit. That's silly. That's crazy. Nick deals with it all the time. I'm sure, if you're out there in the public eye, it happens. But it's funny, like, they spell my name wrong. There's a period, there's an underscore. They use something else, but they're trying to use the same avatar. They're whatever. There's all sorts of creative ways to be scammers. But in my channel, that's the best place to find me. All right. So really quickly, I'll just review this, and we can take a couple more requests. I got to jump in about 20 minutes. But thanks for popping in here. So when I go live on YouTube, my channel is youtube.com/Chris Pulver. You'll see it under the handle Chris Pulver Trading. I'm going to post a blog this afternoon on how we did this week. So overall, I'm trying to think. Gold positions are doing really well. Bitcoin's up. I mean, the portfolio's been up this week. I don't know if I actually closed out for a lot of gains. I still have some strangles and straddles and credit spreads. I did have a couple expire on the 28th. I did have some income this week. I'm trying to think what it was. Maybe some credit spreads, maybe an iron condor or two. Nothing crazy, but I'll find out what those gains were. So forex wise, it was a pretty good week. I think I generated over 2,000 pips with auto trading. I had a perfect storm robot this week. This is one of my range robots. I had 40 pips on one of my systems. I had 876 on another one, and my Pockets Pattern Pro was up 243. And then my trend system that's been crushing it this week has made a lot of money on some dollar pairs and Swiss pairs. It's up 1,218 pips. So I think I added up the numbers earlier today. It was like 20. It was over 2,000 pips. So 1,218 and 40 and 876 and 243. So just in auto trading this week, I did 2377 in pips in the forex market. I'm trying to think. I'm sitting on, and this is gain profit, gain pips in my accounts. I'm sitting on over 6,000 pips. I had this class that I created last fall. We started to basically invest in the forex market, meaning I wanted some positive swap, I wanted some positive carry, and so I built a class called Portfolio Builder. And I started with a $10,000 account. Right now, the current balance is around 11,001. So I'm up over about, let's say 10, 11%. But the group trade, so all my trades as a net position is up about 700 pips. But if I took all trades that I'm in, I'm sitting on over 6,000 pips of profit. I'm not taking profit yet. I'm still building these positions. I think there's a long ways to go. I still want to let these profits run. So maybe my first big chunk would be, okay, look, we're up 10,000, 15,000 pips. Now I'll take some profit. We hit my, levels where I'm looking at, okay, we might have a pullback and look for, wave 2 or wave 3 structure, whatever I'm watching on the charts. There's the good thing. There's plenty of time to watch these trades. So I launched this course, I think in like July, August last year, again in September, again in November. And you could have even participated at the first part of this year. Look, there's still upside potential on all these trades. So again, if you're interested in my Discord and the education section, I have all these courses, full strategy guides, videos, robots. I do a lot of one-on-one instruction as well, my private instruction. I was telling traders this too. Somebody asked me, Chris, I want to trade options. I want to learn more about your strategies. I want to trade Forex. Look, check out watch videos on A1 Trading, watch my videos on my channel. I've got a trading 101 video series, support resistance, trend lines, winning trades, equity management, leverage, margin, trade size, whatever. All sorts of trust content. Get a feel for what you want to trade there. Get a feel for if the subject matter that I have is there. Watch a couple videos on it. If you're interested in a crash course, if you're interested in learning faster, best place to do it's probably just hit me up for a private instruction session. Spend an hour with me, spend 2 hours with me, get right to the crux of what we're trying to accomplish. I know for somebody that's never traded options, give me a couple hours, I will make you think, man, I want to trade options. And again, I'm not selling anything. It's just I just want people to know, if I could have traded my Forex portfolio like I trade options now, I I think I'd be way better ahead because I've had a way tighter management and way better risk management through the last 6 or 7 years that I've been trading options. So and it's very versatile. You can always position for up, down, and sideways, which is nice. And it's nice to make money when the market doesn't go anywhere, right? If you think about options, I'll just give a quick example here. If I have a strategy, how about this? Here's what the market could do, right? Market goes up a lot, up a little, okay, sideways, down a lot, or down a little, or down a lot. Is that fair? The market can do one of five things, yes? Okay. Now, what if I had a strategy, which I do in options, that if I take a trade and I just did something like, okay, I hear Nick does a lot of cash secured puts or he sells puts. Okay, well, a put does this. If all I did was sell a put, so I'll say my strategy. If I sell a put, as long as the market doesn't go down a lot through my sell put, I make money, I make money, I make money, I make money. You make money 4 or 5 ways. If the market does go down a lot and you sell that put, you can still take the assignment. That's Nick's wheel strategy, where he gets assigned the shares and then he adds covered calls when he's assigned and he lowers the cost basis and he repairs the trade to turn into profit. Because in a bullish market, yes, you can take assignment, you can flip trades. I'm doing that right now with Chewy, right? I got Chewy, CHWY is the ticker. We closed the week at 15.91. I own the shares with a break even of around $16. Let me see what my break even is exactly. My break even on Chewy is $16.49. Okay. So I'm upside down about 50 cents per share. And after April 5th, I'll be able to sell another call and make some money. April 12th, April 19th. I mean, if I get decent premium, I'll just keep lowering my cost basis. I don't intend on hanging on to the stock much longer than maybe a month or two. I mean, obviously, if I get this big fat run to the upside, I'd like to stay out of the way of it. But realistically, if I get to $18, $19, I'll make $1,000. And I'm fine with that. Now, longer term, if I could look back and be like, oh man, I remember when I had Chewy at $16 and now it's up to $30. Well, I don't trade like that. I mean, if I'm trading for right now, I know my break even. I know what I'm willing to take. I make it a profit target of $1,000 or more. If I can flip this thing over the next couple of weeks by lowering my cost basis, get it called away, so be it. If it becomes a really big move to the upside, then I could possibly roll some calls out there. And like I said, roll it out in time, get some credit for it, know where it's going to get called away. I'm doing the same thing on Alibaba and Baidu. Baidu is trading at 105. By April, I think I did April 26th. If I get, so right now the stock stays above $100. I'm in this for a break even at 94.71. If I get called away at 100, I'll make 529 a share. So if I have 100 shares, I make 529 bucks. If I have 1,000 shares, I make $5,000 on just repairing a stock that all price has to do is go nowhere. If it goes down a little bit, I still make money. Goes sideways, I make money. Goes up a lot, up a little, I still make money, and I get it called away for profit, right? And this is also a stock that I'm extremely interested in, where if and when it gets its act together, there's a lot of upside potential. We're talking about how excited we were on silver. Same thing here. If this thing just settles in, settles in, settles in, man, I love this position to get started. And I think we have 100% upside on a stock like Baidu or Baba. So traders know this in my trading room. We've been trading those for a while. But anyway, good stuff, right? So check it out. Everyone's popping in here to the group chat. Nice to see everybody. Say hi, say hi. Welcome new followers. Awesome. Welcome all new followers. Nice to have you all here. Check out the text channels. This is the best place to find me. Remember, I will not initiate or solicit, just to be safe. Okay. All right. So I'm seeing some Forex stuff. Yep. Pound yen. I saw that pop up a little bit. We could do a couple of requests. Forex market's really quiet today. I mean, pound yen. I mean, this is the analysis that I have on my chart here. If I'm going to be a seller on the pound yen, it would have to break this structure right there. So if we have the pound yen heading a little bit lower and we take out a level, then yeah, I'd look at a great looking head and shoulders trade, right? So let me draw this out. Just kind of use some textbook. So take your lows, connect the dots. If the pound yen can actually fade that move lower, take out that low, test that low, give us a crown or head and shoulders, I would sell that trade, stop loss above the swing high, and then look for a wave 3 for symmetry, look for a pushback down, possibly come back and retest all the support. I don't know if that's going to happen though. I really don't know how much stronger the yen is going to get in a sustained way, because unless we see, and this is my barometer for the yen, the dollar yen has to be something that's going to move way, way lower. Right now, the pound yen sitting here, or the dollar yen rather, sitting at these highs. Look, to me, after this crazy rally that we saw from March 2020 into present, so that rally from March 2020, big pullback for efficiency, push up here, pullback, push up here, pullback, push up here. Look, if price gets tighter and tighter and tighter, you can see what I'm doing here. Where's the sellers? The best place to be a seller is with really obvious confirmation. It's way down here. Who cares about the top or bottom right here? Who cares? This is not the place that I want to say, this is my direction. This is my line in the sand. If I take a trade right now, I've got to have a stop loss, right? So we can go sideways and we can still have a, 3, 4, 500 pip choppy range without a lot of decision. But if I'm a seller, sellers take control here. If I'm a buyer, buyers take control here. So the dollar yen to me is my gauge for all the other yen pairs. If the yen's going to get weaker, you'll see it on this chart. If the yen's going to get stronger, you'll see it on this chart and you'll see it across the board as well. So I'm not sold on yen being strong just quite yet, because as we mentioned earlier, this would be an unraveling of the carry trade, which right now, low volatility in the Forex market, low volatility in the equities market, everything is melting up higher. The momentum chase is kind of paused for right now. I'm not saying that Nvidia can't go to $1,000. I'm not saying that the SPY and other, instruments can't go higher in the broad market. But what I am saying is, in this lower volatility environment, carry is king, right? Meaning that it just favors the resiliency of low volatility yield. And this is in the Forex market. So until we start to see, currency pairs moving 150 to 200 pips a day, it's low volatility. The dollar index is sideways. The yen, to me, on the dollar yen is choppy and sideways. I'm still not quite convinced we've got this big breakout. But the bulls above 152 take control again. And this is where everybody's stop loss is located. So could we free up that liquidity by breaking through that level and going higher? Yes. Could we also free it up by spiking above and then crashing below? Sure. Anything can happen, right? So I am ready and I'm flexible, which is why my trading room is called the Flex Trading Room, because whatever happens, I want to trade it. But I don't have a good trade right now. I don't have a good trade on the pound yen. I don't have a good trade on the dollar yen. I don't have a good trade on the dollar index. So I'm waiting. The trades that I like are the trades I'm in. I'm long against the Swiss. And I'm even short the Swiss yen with a break-even trade. I shorted at 169, and we're trading at 167.70. So I'm about 130 pips or so. But I'm break-even on the trade, so there's no risk on it. Everything else, long against the Swiss, on the Aussie, and the CAD, and the Euro, and the Pound, and the New Zealand, and the dollar. And I'm sitting on about 6,000 pips of profit, and I'm going to keep holding it. So I'm going to keep trading what's working. I'm hoping we get a little bit of volatility coming into next week as we kick off Q2 and we get some news. We'll find out. Good, bad, and different. We'll find out. Okay. Euro dollar, Jackie. I mean, you can look at the dollar index and see the same thing. So dollar index, the DXY, pretty hard to determine what this thing wants to do. So if I look at the dollar index, you have to remember that the euro dollar is the most heavily weighted portion of that. So euro dollar to me is still indecisive. That trend line I had drawn originally, but I really don't like it. I don't think that we have any clear decision outside of this. It's the cleanest or the least dirty shirt in the laundry. And so if we see the dollar getting stronger, we see the euro dollar heading lower. I will say this though. If the euro dollar heads down to 104, 105, I'm a buyer, in my opinion. I'm a buyer. Okay. If it comes down to worst case scenario, we have high to low, maybe a high to low here, and I find a big pocket level. But I don't think that we're going back to below parity. I think that after that, test a parity again for the first time in 20 years on the euro dollar. I think parity would be pretty well defended by bulls. I think also this kind of 102 to 103 zone if we even get there, but I'm making it a little bit noisier than it has to be. If this dollar gets a little bit stronger and the euro dollar heads down, I really like this 105, 104 zone to look for a trend line break and look to start buying back again, even if we went to the middle of the range. If that's all we did was traded it back to the middle of the range, I'd buy it low. I'd take profit up here, right? If it drifts higher, fine. I mean, maybe gets a little bit more complicated. But coming off of this level, remember, this swing, if this is a wave one, all this could be wave two, all of it. And if we get a wave three on a weaker dollar, then that should push the euro dollar higher. I just don't think it's ready yet. I think that right now, low volatility, favoring carry, favoring swap, the euro dollar, it's one of the most liquid currencies in the world. So that's the hard part too, is it's going to be a 50, 60 pip day mover. And what I don't really want to do is buy the euro dollar and have to pay negative swap for it every day. That's why I'm not doing anything on the yen unless I really believe that the yen's going to get stronger, which I don't. Do I trade the peso? I did back in the day. I traded the peso a lot going into the 2016 election. 2014, 2015, 2016. I traded the peso a lot. This was the Trump trade. This was crazy. I don't remember. I think it was here. This was the Trump trade on the peso, and then I shorted it, and then we had some equal lows. I mean, I took some stabs at the peso. COVID, I'm glad I didn't deal with the yen or the peso because that was like a 60,000 pip move in about a month. So after COVID, I just kind of stopped trading it. Once I saw like the Turkish lira was breaking and the krone and the South African rand and all these exotic pairs, and plus, they're higher spreads, they're more expensive, the margin increases, they're illiquid at times. So anyway, the peso's been a great carry trade as far as unraveling, once we had this big resistance. But I haven't traded it in a while. Yeah, it's been a while. Okay. So anywho, I think that's it. I love being here. It's nice to talk to everybody. Nice to see some new followers join the community. If you need anything, let me know. Hit me up in the Discord group. Just know it's me, right? And post it in the free group chat. I'll respond. I watch it every day. It's on my phone. It goes with me everywhere I go. And I'm just here to help. So, like I said, if you're interested in learning more, you want a crash course, the private instruction I think is a great way to get on track with some, address some problems, talk about your strategies. What can you do better? I'm just going to share all my experiences and hope it helps. And typically it does. Okay. So that's it. Happy Friday. Have a great Easter weekend. We'll be back next week. And I'll see y'all soon. All right. Thanks. Bye.
Thanks again for watching today's show. Our goal at A1 Trading is to continue to share free value to our audience through daily videos and articles, keeping you up to date with the latest market coverage. If you enjoy our content, make sure to subscribe for more. From all of us at A1 Trading, have a great day, and we'll see you next time.